Hey, good evening, everyone. Remington Carlson, fund manager at Green Hills Growth. I wanted to reach out and share a little bit of insight regarding today's Fed rate cut for interest rates. So, of course, you may have your own opinions about interest rates, how they affect you, how they might affect the economy. I'm not going to claim to be able to foresee the future. However, I do expect some changes and some impacts based off of how some of these mortgage rates are changing. I figured I'd share that with you and how I expect to play that out. So first thing, there's two main mortgage rates or two main rates that I would say impact the majority of our operations. First, on some of our smaller parcels that are closer tied to a residential use where someone would build their primary residence, typically on a smaller lot, 5 acres or less, we see a lot of these transactions. Um, they often the buyers are tied to a lot of the activity of home building, which is tied to the 30-year mortgage rates typically, and the activities of those. So of course we've seen a downward trend over the last several months of the 30-year mortgage rates, as you can see on this graph. Additionally, um, we've had the first quarter rate cut that we've had so far this year from the Fed, and they expect to have more later this year as well. So really, this does two things. So first of all, address the 30-year mortgage rate trends. These will likely, of course, the Fed rates trends don't always trend together. However, these are likely to continue to go down, and if they do go down, what I expect is that home buying activity is going to increase in general across the country. And of course, that's going to move some of the markets that are already active, which is where we're at, to heat up even more. And this should probably create some more opportunities in those areas where we might otherwise have slowed down our activity because there's not as much home building, to create more areas for investment opportunity. Right. So that's the first thing that I see. It'll make the hot markets hotter, and it'll actually warm up some of those lukewarm markets to maybe create some investment opportunities once home buying activity, construction heats up with more affordability on this side. The other thing is, in general, the prime rate, how it affects us. So this directly affects us, as well as affects a lot of the people who buy the land from us. We typically see this at larger acreage sizes, so 10 and above. And the reason why this matters is because when we go to get a loan on the land, some of the land that we purchase for our projects, our our interest rates from these banks are tied directly to this prime rate. So if this goes down, this is going to reduce our interest rates as well, which are going to reduce our costs, which is going to create more profit margins, right? So that's going to help us directly, and then indirectly, the people who go to buy these lots from us are also going to be getting loans that are tied directly to this interest rate as well. So I'd expect activity to start picking up as the affordability for borrowing against these kind of properties goes up, and of course it increases our profit margins as well on our deals. So that's the general insight that I have. Obviously I can't predict the future. This is what I see coming down the pipeline, especially for next quarter, and figured I'd share that with y'all. If you have any questions on this, let me know. But take care. See ya.